Some of Wall Street's biggest are hobnobbing and trading advice with senators, cabinet secretaries, and the nation's top journalists. Our Lindsay Arendt got a front row seat at the first draft of history conference, and she joins us now with details and an exclusive interview with Carlyle Group's David Rubenstein. So, Lindsay, who's there and what can you tell us?
Laura, you got everybody here from Treasury Secretary Tim Geithner to Citigroup's Vic Pandit. Right now, AOL CEO Tim Armstrong is speaking. All of these leaders are speaking on the record to journalists here at this conference about the impact they think recent news events are going to have on history. I got up with Carlyle Group co-founder David Rubenstein a short time ago, as you mentioned, and I asked him specifically how the economic crisis would affect his company's fortunes and more generally how it has affected the private equity sector in general.
Well, everybody has been subjected to some problems because of the economy. It's been the deepest recession in 75 years. We have weathered the storm pretty well. We had some companies that didn't perform as well as we would have liked, but generally I think we're coming back. We're now investing again. Our companies are in good shape. I think the private equity industry is going to come back and be stronger than it was really just a few years ago.
Despite the fact that there is a push for more regulation, more oversight of private equity, possible more transparency, does that concern you?
We're not against transparency. We've been very transparent. I think there's been undue views that we aren't transparent. We are very transparent. I think the regulation that's likely to occur will be the kinds of things that we can live with. Obviously, we don't want to do things, we don't want to have the government do things we think are unduly restrictive, but I think what's being talked about now are things we can live with. We are more concerned about some regulation that might occur in the EU. I think there's a greater concern about private equity than there is in the United States, and we are trying to address those problems in the EU.
What specifically gives you the most concern?
Well, the EU is considering some regulations that would make it more difficult to invest in private equity and more difficult to operate these types of companies. But I think that's something that the EU officials are now listening to, our concerns, and I think will probably be addressed.
Earlier today in some comments you mentioned some mistakes that you personally had learned from given the economy and sort of the financial crisis. Can you give me a sense of what those are?
Well, nobody probably realized how deep the recession was going to be, so probably we bought some companies at slightly higher prices or maybe with more leverage than we should have used, and therefore probably some of our deals wouldn't be as good as I would like them to be. On the other hand, I think we've weathered the storm, as I say, pretty well, but everybody learns from their mistakes, and the mistakes we made probably was not realizing how significant the economy was going to go down.
You had mentioned also in your comments talking about how the United States can't possibly retain its status as the world's largest economy for much longer. Tell me a little bit about that.
Well, after World War II, we were 48% of the world's GDP, almost 50% of the world's GDP. Now we're about 22, 23% or so. But China is now a full member of the capitalist club. And as a result, given its population 4 times our size, it's just inevitable that they will have a much bigger economy than we will. And probably the year 2030 to 2035, they will surpass our GDP. That is not a concern for alarm. We'll still be a very large economy. We just won't be the largest. We've been the largest since 1870, and probably it's somebody else's turn at some point.
Even though that you say that may not give you much concern, what about concerns about debt and the dollar? How does that affect you?
Of course, I'm worried about the debt. We have in the United States about $11.5 trillion of overall debt, not counting unfunded pension liabilities, which are probably another $41 trillion of debt or unfunded liabilities. And we have to remember, we're selling our Treasury bills all over the world today, and if people don't want to buy them because they think our debt is too high and we can't pay off our existing debt or our new debt, we're in trouble. So right now, we're very fortunate people are still buying our debt at reasonably low interest rates, but I am worried that at some point people may want much higher interest rates than we could really afford to pay.
And we will have much more of our exclusive interview with Carlyle Group co-founder David Rubenstein at 2:40 this afternoon Eastern Time.